Once again, ladies and gentlemen, boys and girls, and children of all ages, we are live back here into the Investor Show. As always, this is Grace's host, the Prince of Investing, Prince Dykes, coming to you guys and girls live all the way from the beautiful city and state of Denver, Colorado. Don't forget to hit that like, subscribe, comment, and share button. And as always, I don't have a lot of time, and I definitely know you guys and girls don't have a lot of time, so we are going to jump straight into it. Ladies and gentlemen, I'm glad to be back here with you guys and girls today. We're going to have a very interesting topic. The first thing we're going to talk about today, we're going to be talking about the Dow Jones stocks are dropping over 500 plus points. We're going to talk about the Walmart and Tick-Tock deal. And we're going to talk about finding the next gem in the market, ladies and gentlemen. It's going to be a very interesting topic. What's going to make this topic so great is I'm going to walk through. Today, I'm sitting in my office for the people that are catching me live. I'm sitting in my office today. It's my first time ever shooting in my office video-wise. I usually shoot in my other room, which I deem as my studio that I usually shoot in. But today, I just kind of felt like changing it up a little bit. My wife asked me, Prince, what are you doing? So she said, what are you doing shooting over here? And I said, I'm going to shoot over here today or whatnot. I don't feel like going over to the other room and all other stuff like that. So I'm shooting in my office today. So that's good for that. But today, ladies and gentlemen, what's going to make the episode so great is we're going to talk about why stocks are dropping. And we're going to get into this. We're going to talk about why stocks are dropping. We're going to get into the Walmart, Oracle, Tick-Tock deal that just went down. We're going to go straight through the horse's mouth and how can it be beneficial to investors. And the next thing we're going to get into is finding that next gem. Ladies and gentlemen, I'm going to start from start to finish on trying to find that next small gem. I'm going to give away all of my, what do I do? What do I look at? You guys and girls are free to tune in, and you can let me know if I'm an idiot or not. Say, Prince, I think that's a dumb way of looking at it, or it could be an awesome way to look at it, but we're going to do that today. Guys, it's the most informational show that you're going to catch across the web, as you guys already know who already tunes into this show. But for the people, this is your first time, and if it's your first time, and if you haven't done so already, ladies and gentlemen, you already know what time it is. Go ahead and make sure you hit the subscribe button, hit the bell icon, hit that like, comment, and share button. And make sure you grab your Investor Show Cup mug. Thanks to everybody out there who's been saying they grabbed the Investor Show Cup mug. It's the only way to read financial reports, guaranteed to make you read financial reports 10 times better. I want to thank everybody out there. People, I do see you guys and girls comments and DMs. You guys and girls tell me, hey, man, I just grabbed my mug. I'm doing this, all the good stuff. I definitely appreciate it, ladies and gentlemen. It started as a joke. My wife brought this for me as a gift, and I was drinking out of it. And, some people just DM me kind of laughing about me drinking out of this big mug and stuff like that. So I decided to make it a real thing. And, I created it or whatnot. I put it up, and I'm glad you guys and girls support it. It's the only way to read financial reports. And ladies and gentlemen, without further ado, we're going to have to jump into this topic. Let me see what you guys and girls are saying in the comment. We got Freddie B. What's going on, Freddie B? I think Freddie B told me he got a cup, if I'm not mistaken. I think I saw a comment with your name on it, Freddie B. I want to say thank you for that. Freddie B is always in here, ladies and gentlemen. So you're going to get a very good topic today, Freddie B. Thank you for being in here. This is Miss Michelle Thompson. Hello, Prince. Can't wait to hear what you have for us tonight. Thank you. Hello, Prince. I can't wait to hear what you have for us tonight. Thank you for your knowledge. Thank you. Always. Thank you. Wayne. What's up, Prince? What's going on, Wayne? How you doing? That's my guy right there, y'all. That's my guy, Max B. Max B said, can we get a book series plug? Ladies and gentlemen, don't forget, if you haven't done already, I got my sales report from last month, and I was surprised how many books sold last month without me giving it a plug. So appreciate everybody for going out there. I always tell people, don't donate to me, support me. Check out the Wesley Learns book series. It's Wesley Learns to Invest, Wesley Learns about credit, and Wesley Learns about insurance. Children's books going over investing, credit, insurance. The originator of all of this stuff that you see kind of going on now. No shots out to anybody else. But I thought of these books back in 2013, 2014. I published it myself in 2015. I published the second one in 2017. I published the third one in 2019 last year, which features NFL Hall of Famer Terrell Davis. Whole book series stamped and signed by the richest investor of all time, Mr. Warren Buffett. So shouts out to him and all the good stuff. So you can catch Wesley Learns anywhere across the world. You can get it on your iPhone. I mean, you can audiobook, you get an ebook, you get a paperback, you can get a hardcover. WesleyLearnsToInvest.com, Amazon, iTunes, anywhere you can get it. Right. So thank you guys and girls for supporting it. And thank you for the people who are continuing to support it 4 or 5 years, 6 years almost later. And people are still supporting that book series. I get written a lot about that book series. So definitely I thank you guys and girls for supporting. And for you guys and girls who don't know, Wesley is my 9-year-old son. You know, he's here now, but he's not here right now with me. He's with his grandparents. That's why you don't see him running around in my office, all of the great stuff. So, ladies and gentlemen, let's get into it. Let's get into it today, ladies and gentlemen. We've seen the stock market. Dow Jones has dropped over 500 points. Another bloodshed day across the entire market, ladies and gentlemen. I want you guys and girls to remember the most millionaires are made in the downturn of the economy. You remember back in March when everybody said, you know, in March when the market was crashing, everybody ran to cash. Everybody ran away and said the world is coming to an end. Then came the summertime. Just a couple weeks ago in August, people told me, man, Prince, man, I think I missed out. I should have brought some more of Uber when it was down to $19. Man, I should have brought some Apple when it was down. Man, I should have brought some XYZ. I feel like I missed out. Then guess what happens? The markets start to decline. And then guess what those same people are doing? They're backing up. They're not looking at, you know, and I'm saying this topic is because this is what an amateur investor does. I did it for the longest time, and I still have to fight the urge to this day. So when you see downturns in the economy, you think it's going to get worse, right? You think it's going to get worse. You try to bet against the market. You want to hold off and wait till the market comes back. You don't know or whatever. But ladies and gentlemen, do not get so close to the market following every day that you can't step back and zoom back and recognize the market has a trend of going up. Don't get so close. Don't be so focused on the trees that you forget the forest. Stand away, step back, and step away, and you will be able to see it's still an upward trend. And everybody knows the market just doesn't go up, 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 up every single day. It will have downturns, ladies and gentlemen. So with that being said, I'm not smart enough to be, and most of you guys and girls that are tuning in that are going to catch this playback, you're probably not smart enough to be a bear. And what I mean by being smart to be a bear, betting against the market. Betting against the market, you have to have your timing right. You have to have the right resources, all of the good stuff. But an idiot can log in and buy an Apple share, forget about it, and wait 1, 2, 3, 4, 5, 6 months down the line and see what's going to happen, right? So, ladies and gentlemen, I want you guys and girls to keep in mind the bear will win a battle, but the bull will win the war. The bear will win the battle, but the bull will win the war. Prince, what does that mean? Every now and then, the bear market will come in and scare everybody, and the market will turn red. But got to remember, over time, the bull, the person going up, will win the war. I'm going to tell you guys a secret that I learned. You might already know this, but a lot of people don't know this. Poor people take bigger risks than wealthy people, right? What I learned, people who are, you know, wealthy, who are rich, who have a $500,000, $1 million sitting in a portfolio, they're someone, they're not considered, they're not worried about the next big thing. They're not the one buying the call options and the put options and all those stuff like that. It's usually poor people are the ones who are trying to find a get rich scheme fast, right? I have buddies who never traded a stock in the world. They'll DM me and they want a call option. They don't care about making 7%, getting a dividend, dollar cost averaging, holding on to great companies, buying the dip. They don't care about none of those fundamentals. They want to buy something on Tuesday, flip it, turn it around on Friday. And that mentality, ladies and gentlemen, yes, you will be right sometimes, but over time, that mentality is a loser's mentality. The people who are turning around, who are winning. Now, Brent, I'm not going to sit here and say majority. I'm speaking for the majority. Yes, there will be some people that will win, but majority of those people will turn out to be losers, right? So with that being said, being as smart as you are, sometimes what I'm good at is I'm smart enough to know what I'm dumb at. I've never been a smart guy. I've never been an academic scholar. I never was smart at anything, some guy who knew something. But sometimes I was like, you know what? I'm dumb at this. I don't really know. How can I get on the winning team? Joining the winning team, joining the winning side is going for the lone bull. The lone bull is the winner. Ladies and gentlemen, let me see what you guys and girls say in the comments. Freddie B saying, yes, I got my cup. That's what I'm talking about. Shout out to Freddie B for getting his Investor Show cup. Freddie B, tell me how easier it is to read those financial reports with your Investor Show cup. I guarantee it's a whole lot easier. Now, Freddie B knows what the balance sheet is. He knows what the cash flow statement is. And he knows what the income statement is. That's something that 98% of regular investors do not know. They don't know. He knows how to find the S because Freddie B has been tuning in so long. He knows what a financial statement is. He knows what a 10K is. He knows what a 10Q is. He knows what is told in the cash flow. What are the 3 sections of the cash flow statement? What is the top line? What is the bottom line? And ladies and gentlemen, knowing that type of material as an investor makes you better than 90% of people who invest. It took me years and years and years to learn that information. Via informal education and formal education, it took me years. I was buying what somebody said. I would read an article from CNBC or Yahoo or whatever and just buy off of that. I didn't understand. They said, oh, it was great. But as I started to meet those people, I started to network and I started to learn where they was getting their data from, what this stuff really means. What does it mean by account revenue? What does revenue mean? What is top line? What is bottom line? What is net? What are total assets? What are the total liabilities? How much debt does this company own? How much debt does the competition own? You can get all that stuff, ladies and gentlemen, with your Investor Show cup. Go in the description box. Tell them about it, Freddie B. Somebody said on Facebook, saying exactly the pullback. Ladies and gentlemen, the greater the pullback, the greater the comeback. Ladies and gentlemen, when you see stocks crash and everybody's trying to explain what went wrong, it's a cycle. It's a true story, ladies and gentlemen. When I was trying to teach my son how to ride his bike, and he was having a hard time riding his bike. I mean, I would guide him. I called my buddies, called my dad, and I would push him. I tried all the techniques, hold on to the handlebars. I tried everything, telling him, building his confidence, telling him he can do it, all this stuff like that. Then it got to a point to I thought, man, maybe my son just can't ride his bike. I don't know what's going on. And he would get on his bike and he would fall. And he thought every time he fell, he thought something was wrong. Like, Dad, why I keep falling and all that hurts and blah, 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 blah. And I was trying to explain to him, son, this is just a cycle. You're going to get it. You're going to get it. You're going to get it. But in the back of my head, I'm like, I don't know, can he get it? But I said, hey, you're going to get it. But he thought he was doing something wrong every time he fell. But in all actuality, he didn't know this is part of riding a bike. Part of learning how to ride a bike is falling. Part of investing, part of stocks. Let's go with the pros and cons of stocks. I wrote this down. Y'all didn't know all this was planned. I write out all my shows. I study for all of my shows, but I don't get on here and just talk what I heard. I really do. I really try to bring y'all some good information. So, ladies and gentlemen, the benefit of investing in stocks, it is easy. It is the highest performing asset class out of all. So when you look at all the asset classes, ladies and gentlemen, you got real estate, you got stocks, and you have business. When you look at over time, stocks have outperformed any asset class. Now, people may get on here and say cryptocurrency, Prince. I don't really know if I consider cryptocurrency an asset class, but if I did, I would kind of put it up under the stock market as well. So one of the pros is that over time, we know over the long run, stocks will outperform majority collectively over any asset class. Now, the other pro is it's very easy to get into. Let's say if you're someone who's tuning in right now, don't know a thing about stocks. Ladies and gentlemen, it don't take you probably, what is today, Tuesday? By Friday, you can have money into your account and start investing. Nowadays, you can just pick up your phone and get a Robinhood app and, create an account by this weekend. So it's very easy to get into. Compared to if you wanted to buy a piece of land, you have to find a piece of land. You have to go through all the paperwork. So it's a lengthy process to even acquire a piece of land. Whether you can acquire a share of Facebook like that. It's very liquid. And the third pro is very liquid, meaning that you can get in and out of a stock very easy. You could right now, if you own Amazon, tomorrow morning, you can wake up, sell Amazon, move on by your business. Now, ladies and gentlemen, let's get into the negative side of stocks. The negative side of stocks is it is the most volatile asset class there is. Stocks move up and down, up and down, up and down. They're so volatile in the short run. So compared to this other asset classes, compared to real estate, compared to a business, the value doesn't shoot up and down. Let's take me for example, right? I purchased my home. Let's say if I purchased my home for $100,000 and I get a letter in the mail saying, hey, Prince, 2 weeks later, I get something in the mail saying the value of your home is now $110,000. Would you like to sell it? Even if I wanted to sell my house, I have to go through a lot of work. I have to find out where am I going to live, when I sell it, who's going to sell it, the closing costs, and the this and the am I going to go to realtor? Am I going to go by myself? I got to put it online. All this stuff. It would take me months to sell a house, but you can sell a stock like this. To buy and sell a business, it takes months, not if years. For a company to go public, to be on the stock market, it takes years, right? Sometimes it could take years. Sometimes it takes even a year. Hold on to that because that's going to be very important later on in the show. So stocks is very volatile because people can buy and sell fast. That's the downside of being able to buy and sell fast. It makes it extremely volatile, and people wake up every day and they're wondering, Prince, what's going on? My investment, I had 20,000 in my account. Now I only got 5,000 in my account. What's going on? Something, oh my God, am I losing? Sell, sell, sell. It's very volatile. You got to hold on to it, right? So learn the cycles. Just like I taught my son, I said, son, falling is part of learning how to ride your bike, right? Stocks going down is part of investing for the long term. Any asset class, somebody can write me a letter right now today and say your house value is 50% less than what you paid for it. I bought it for $100,000. It's only worth $50,000. If I was to get a letter right now, that would affect me zero. Another downside of stocks, I mean to say that stocks doesn't serve a utility. There's no utility there. With my house, I can live in it while the value is down. With stocks, you can't do anything but maybe collect the dividend or just watch it and wait till it comes back up. So it doesn't serve a utility in the meanwhile while it's down. That's another con. So, ladies and gentlemen, I don't want to get off that horse. I want to go into my next topic. We're going to go into the next topic of the Walmart Oracle Tick-Tock deal. What is it? I'm going to go and tell you guys and girls, what is Tick-Tock? What is Walmart and Oracle? If you don't know, I'm pretty sure everybody here probably know what Walmart is, but some people may not have heard of Oracle. We're going to talk about what Walmart and Oracle deal is. We're going to go through and we're going to read together what Walmart put out on Saturday about the deal, because that's the only official information that I got. Now, there are plenty of people writing about it, but I don't see anything from Oracle, but I do see something from Walmart. So they are in the deal. So I'm going to read through their deal, and I'm going to talk about what is a great way how you can invest and benefit off of the Tick-Tock or Oracle deal if you like it. Walmart Oracle deal. So let me get in y'all comments. Let me see what you guys and girls are saying. He said, happy birthday, happy anniversary. That's my guy, Clarence. What's going on, Clarence? Y'all give a shout out to Duncan there. Appreciate it. Thanks for tuning in, man. Thanks for tuning in. I'm definitely going to be texting you after this show tonight. And she says, Cash App account. Cash App account. Miss Jacqueline. How you doing, Miss Jacqueline? She says technology. Okay. Ladies and gentlemen, so without any further ado, let's jump into the Walmart Oracle deal. Here we go here. All right, we're going to go to Walmart. No, I want to see. Make sure I got the right one. Potential. All right, let's try this one first. All right, here we go. This is the right one right here, right, ladies and gentlemen? This is coming from Walmart Investor Relations. This is Walmart Investor Relations that are live right now, ladies and gentlemen. Of course, everybody wants to look at it, but we're going to look at this, right? All right. Here we go. Thanks for y'all. Thanks for my producer Chad DMing me on that. I don't know what happened to my microphone. I think I hit my wire. There we go. Here we go. There we go. We are back. I'm sorry about that. All right. He said, I hate that. And he looked like he was dropping some nuggets. I'm back. So, ladies and gentlemen, let's go back I don't know what the last piece that y'all heard. He said that I'm muted. I'm sorry about that, ladies and gentlemen. I'm sorry about that. I hit my wire here, and that's what happened. Thanks to my producer for texting me and letting me know that. Because I was on the other string reading the other string. Somebody said it looked like he was dropping some shit. Thank y'all for letting me know. All right. So anyway, ladies and gentlemen, so let me go back to make sure I didn't lose anybody. All right. Freddie B said I lost sound. Okay. I got my sound back, ladies and gentlemen. I hit my wire there by mistake. All right. Y'all can hear me pretty well. Sorry about that. That's why I need to stop switching my screen. When I switch my screen, I can't see my audio board, and that can take me out sometimes. So, ladies and gentlemen, this is what I meant to say. So, the deal with Tick-Tock. Tick-Tock is a Chinese company. It's held by the Chinese government. And America didn't like that. When we downloaded that app, everybody was having fun. Heck, I even had Tick-Tock for a little while. I think I still got it. I just don't utilize it that much. But with that being said, when we had Tick-Tock, the Chinese, they had the access to all these Americans' data, all these Americans' phone. So Trump didn't like that because America and China are not the most, we're not the friendliest, we're not allies, right? For the most part. So pretty much Trump just said, hey, either they're going to get out of America or they're going to sell it to somebody in America, and we're going to control that data. Either we're going to control that data, or you can just take your country and take your Tick-Tock and go somewhere else. So now that started a bidding war. People from Microsoft, people from Apple, it was so many companies. Don't quote me on that, but so many companies was bidding for Tick-Tock. So now what happened was Walmart and Oracle have came into play and said that, hey, we want to make a bid on Tick-Tock. So ladies and gentlemen, let's go down some more here to see what they said. So right here, this is what they put out on Saturday, which was, I think it was Saturday. That was Saturday. Yeah. Okay. The president of ByteDance owned Tick-Tock, has received a tentative approval from the U.S. government to resolve the outstanding issues, which will now include Oracle and Walmart working together to invest and acquire 20% of the new form Tick-Tock Global. So right here, they're saying Walmart and Oracle will have 20% of Tick-Tock. Now, we just saw earlier Walmart saying they want to buy 7.5. If Walmart is buying 7.5, what's left is 12.5. So that means that Oracle will have 12.5% of Tick-Tock Global. As part of the deal, Tick-Tock has created a new company called Tick-Tock Global that will be responsible for providing all Tick-Tock users in America the most user-friendly around the world. Today, the administration has conditionally approved a landmark deal where Oracle becomes Tick-Tock cloud provider. Ladies and gentlemen, right here. Today, the administration has conditionally, upon some conditions, has approved a landmark deal where Oracle becomes Tick-Tock secure cloud provider. Why is that so huge, ladies and gentlemen? This is huge because this is telling you Oracle is a cloud security cloud provider. So all of that data, when you log on to Tick-Tock, like Facebook has all my data, YouTube has all my data, Instagram, everybody has my data. They got my phone number, they got my email address, they know how to contact me, they know how tall I am, what do I eat, when I lost weight, when I gained weight. Hypothetically speaking, I won't be surprised they do have it, but they have all our data. And now that data is going to be controlled by Oracle. Let me know if you know what Oracle is. Oracle is a cloud computing company. So now, who would benefit most from this deal? How does Walmart make its money? And how does Oracle make its money? And ladies and gentlemen, how do you know when Walmart is making its money and when Oracle is making their money? You got to pick up your Investor Show cup and you got to read the financial reports. Reading the financial reports, ladies and gentlemen, will tell you, you look at the income statement, and you go to streams of revenue, the top line is revenue streams. What are coming in? How is this company making its money? How does Walmart make its money? How does Oracle make its money? Ladies and gentlemen, here we go. So ladies and gentlemen, we're going to see how does Walmart make its money and how does Oracle make its money? This is how you're going to be able to tell who's benefiting the most out of the deal, right? So let's look at Walmart. How do they make their money? Which is pretty self-explanatory, but could be a learning lesson for people out there who don't read Walmart financial statements. But in the words of the great Kevin Hart, you're going to learn today. So let's learn today, ladies and gentlemen. The first we're looking at, this is Walmart. Ladies and gentlemen, this is Walmart Q10 report. Let me know what a Q10 report is, ladies and gentlemen. This is the quarterly report. This one was filed. Here we go. Here we go. Here. This is the quarterly report. I think this one was filed. This was the latest one. Here we go. This was provided all the way to the end of July 31st. So let's stroll on down here, and you can go here at the top. Go to consolidated income statements. Condensed consolidated statements of income. We want to look at the income, right? So they tell you right here there are two revenue streams: is net sales and membership and other. So majority of their right here, this is written in millions. So they made 136 billion from net sales ending in 2020. So you're talking about 99% of their money comes from net sales, selling things, right? That's how they make their money. Now let's take a look and see, how does Oracle make its money, ladies and gentlemen? And I'm showing you this so you can look this up yourself. You don't have to go by what somebody said and what you heard. Before we go into there, what's going on, Mike? Mike is out there in Toronto, Mr. Lemonade. Of course, I got a cup of lemonade. You can even put lemonade in your Investor Show cup too. He said, good evening, Prince. I hope you enjoyed your birthday. Yes, ladies and gentlemen, I did enjoy my birthday. I turned 36 years old on what's it, Saturday? Friday. Yep, Friday was my birthday, and my 11th year anniversary was Sunday. So my birthday and anniversary are right there next to each other. So, ladies and gentlemen, let's get to it. Let's see, how does this company called Oracle? Now, take you for example, you don't know anything about Oracle. You never heard of Oracle, anything like that. So I want to show you guys and girls how you can find a company you never heard of, don't know anything about, and how you can find how do they make their money. I think this is Walmart one. Let me share the correct screen here. Here we go. Let me stop sharing that one. I think I picked the wrong one. We're going to go down to this one. I believe it is. Yes, this is Oracle. This is Oracle 10 kilo. This is the all the way ended into August 31st. 10Q report. Now, as we stroll down, you never heard of this company. You go here to that 10Q report, and we're going to go to the consolidated income statement. This is their balance. All right, here you go, their income statement right here. Boom. I don't want to see that one. I want to stroll up a little bit more. Okay, here we go. Oracle in the last 3 months. Look, cloud services and licensing support. This is in millions. So they made $6.9 billion in cloud services and licensing support. Then on their cloud licenses and on-premise licenses, I don't know what that is, they made 800 million. On hardware, they made 800 million. Services, they made 700 million, making a total revenue of 9.3 billion. So as you can see, ladies and gentlemen, I broke that down. I did the math, and I think that came out to be 75%. I did the math on my show, ladies and gentlemen. 75%. I think that was like 75%. I know I did the math in here somewhere. Maybe I didn't write it down, but it was about 75% of their income comes from cloud services and licensing support. This is not me saying it. This is ended in August 30th. They made 6.9 billion in cloud services, and their total revenue was 9.3 billion. Prince, why is this important? Why are you telling me this? He says we're the same age. Nice. Appreciate it, Mike. He said we're the same age. Lemonade brothers. Lemonade is the start, ladies and gentlemen. That's the inside joke. Mike pitched the company of Lemonade, and we kind of went through the company Lemonade, and I've been following the company Lemonade. This is an insurance company. And Mike hadn't been doing too well lately, but I know the whole market is down, so I'm not going to hold that on you, but I do watch it, and every time I see it, I think of Mike out in Canada. You know, I haven't met Mike before. I don't think I even seen a picture or video of Mike. I don't even know what Mike looked like. But yes, but you know, thanks, Mike, for tuning in. been a very avid supporter. Ladies and gentlemen, why this is so important? 75% of Oracle's income comes from cloud services. Now, we just saw in the statement that was released by Walmart, they said that Walmart and Oracle deal together is going to compute for 7.5. Walmart and Oracle is going to compete for their whole market share is going to be 20%. Walmart said it's going to be 7.5. That means that Oracle is going to be 12.5. Now, also, they said that Oracle is going to be in charge of the cloud services for Tick-Tock. Why is that so important? Because 75% of Oracle's income comes from cloud services. So 75% of their income, they made 6.3. Then it was 6.3 we just saw, over $6 billion from cloud services. That's very important because now they have a 12% interest in Tick-Tock. And we know, what did Walmart just say? Tick-Tock is going to go public. This company, within the next 12 months, they're lining it up to go public. They automatically got two major companies like Walmart and Oracle pushing them to become public. So now you can see how this will become profitable for Oracle. For now, what does this mean to investors? How do you interpret this as an investor? If you are a Tick-Tock fanatic, if you're a Tick-Tock person, if you're big into Tick-Tock, or if you're big into the cloud computing services and you're looking for the next big thing, Oracle could be your guy. Because we know that all this information, they just reported in this report, Tick-Tock has 100 million users. With the 100 million users, all that data now is going to go to Oracle. That's a new revenue stream. Plus, when it makes its initial public offering and it becomes public, it's going to be big. Now, am I big into Tick-Tock? No, I'm not big into Tick-Tock at all, ladies and gentlemen, because Facebook is the king of social media. It has Facebook and Instagram. You have Twitter out there. You have Snapchat out there. But as you can see, Facebook is just dominating with zero debt. It has zero debt and it's just massively, growing over time, and it's biting and eating up the little guys. And you've seen immediately, what did Instagram do? What did Facebook do? They created a reel. YouTube created a TikTok. Instagram created a TikTok, or whatever the case may be. So now when you look at all of this information, of all this competition, I'm not crazy about it, but this could open up a door. If you are someone who invests into the future, you can look at a company like, I believe it's going to be more beneficial to Oracle than it will Walmart, because we just saw Walmart make its money by selling. I'm pretty sure Walmart would throw some ads on there and, cultivate a younger audience or whatnot, but I don't really see how it can grow that top line. I'm looking at who's going to have that top line growth, and I can look at the top line. When I'm speaking of top line, ladies and gentlemen, when we just looked at that income statement, what was the first thing at that top line? The top line was revenue streams. And the top revenue stream that I saw had to be Tick-Tock. It had to be Walmart. Top line revenue, majority of its top line revenue came from net sales. Tick-Tock top line revenue came from cloud computing. So immediately, Tick-Tock is going to make money, my ladies and gentlemen, brother. I seen Clarence wrote, he said, thanks, bro. So I wrote brother. But anyway, ladies and gentlemen, Tick-Tock is going to make more money off of the deal, I believe, than Walmart will. Yes, Walmart, it's a great deal for them to market themselves and maybe do some fulfillment in e-commerce, but immediately all that data has to be maintained by somebody. And that's immediately that's the bread and butter of Oracle. That's how they make their money. So I can see it being beneficial to Oracle more so than Tick-Tock. So, ladies and gentlemen, I'm not looking at saying, oh, Tick-Tock is a great investment. I'm breaking this down as an investor and using the financial fundamentals to say that this deal is probably going to be more beneficial to Oracle, which is trading for $60 versus Walmart, I think is around $130. That's my thought process. What do y'all think of that? Now, the next thing we're going to get into, ladies and gentlemen, what is the process to find the next gem? We already know what's big. What's the next big thing, right? By using financial statements, Prince, how can you find what's the next big thing? And I'm going to go through a step-by-step process of finding the next thing. And then I'm going to jump into you guys and girls' comments. What are y'all saying? So number one, I like to look at life-changing. Is it life-changing? Is this what you're doing is going to change people's lives in a positive way, something that people will need? Small cap, I'm looking at capitalization. I don't want a large company like Facebook is large already. Great company, but it's already large. Apple is already large. I like the small guy. Take my son. He's small cap. I'm large cap. My son is 9 years old. I'm 36 years old. When you look at us physically, who's going to probably get taller within the next 5 years? Me, I'm already 6'2". I'm probably not going to go to 6'5" in the next 5 years. I'm probably done with my growing. Versus my son, who's about 4 or 5 feet, something like that. He's probably about this tall now. He's probably going to sprout out like a tree, and he's going to be 6 feet. I'm almost betting if I was a betting man, right? So he has a lot of room to grow. So I'm looking for the small capitalization company. I want you to be small cap. Are you profitable? A small company that's already making money. If you're small and making money, that let me know you can go into the future. There are plenty of small cap companies that are not profitable. I want to know if you're profitable and you're small. I think you have a future in front of you. Number one, do you beat the S&P 500 and the NASDAQ? How are you performing compared to the NASDAQ, to the indexes, right? Plus, how can I tell, why do I care about that? Because if you're not individually beating the NASDAQ and the index, why would I take that massive risk on you? Because investing into a small cap company is very risky. So I might as well invest in the index before investing into you. Plus one beta. What is a plus one beta, ladies and gentlemen? Plus one beta means what is your volatility compared to the S&P 500? Are you going to be bigger? Are you going to be smaller? Or whatever the case may be. Building revenue. Is this company over the last 2, 3, 4, 5 years, is this revenue continuing to grow? How is this cash? Is this cash continuing to pile? Is the revenue continuing to pile? Why do I care about the cash piling up? Because that's how you can defend when a downturn of the economy coming. Last year, when we were saying Happy New Year, nobody thought a pandemic would come, right? But it did happen. And the way you can defeat off a pandemic or a downturn, look at airlines. The way you can defend off a downturn is having cash. Cash to be able to get you through to the next side, to the other side. How much debt do you have? Your debt to total assets. I'm looking at your total assets. I'm looking at your debt. Do you have more than 60% in debt compared to your total assets? I'm looking for something below that. The reason why that's important, that came from Benjamin Graham, the father of value investing, the mentor to Warren Buffett. So I think he may know a thing or two. Knows more than I do, that's for sure. So I'm going to take that into consideration. So we're going to take, ladies and gentlemen, now that you got those things, those are things I jotted down. Prince, how do you go out and find those things? Let me see what y'all said in the comments before we jump into that next topic. Colin said TikTok is full of advertising. Well, that's the way they're pretty much following. Colin, thank you for tuning in. Yes, that's true. They're probably falling behind the winners. They look at Facebook. Facebook makes 98% of its money from advertising. 99 more likely. They make all their money from advertising. And when TikTok comes along, they say, well, if that's how that company makes money, maybe I can try the same thing. So I'm pretty sure they have to advertise in order to make their money. Michael said, this is a valuable lesson, 10Q. I'm going to use this when I research Switch Incorporated. Thanks, Prince. Michael, also look at that 10Q. That's a quarterly report. The 10K report is the annual report. And make sure you do it with your investor show cup, Mike. Way out there in Canada, overseas. Well, not overseas, but our neighboring brother. It makes it so much easier when you read your financial reports. So Colin said, took 3 years of Oracle database administration. I'm not understanding what she's saying by that. You mean took 3 years of their funding? Right? I'm not understanding that. She gives me a thumbs up. Clarence says, TikTok, bro, LOL. So that's what we kind of look at. If you money said, Pete Money, what's going on? What's going on? Money, you doing all right? So anyway, ladies and gentlemen, let's get into it. Finding that next gem. How can you go out there and find that next gem? Now, ladies and gentlemen, please don't take this and say, well, Prince said this, he said by this. I'm just going to go through some steps of finding the next gem because that's something that pegs my head every day. Prince, what's next? We know what's happening. What's next? How can I find what's next? And I'm going to show it to you guys and girls here shortly. Y'all give me 1 second. I'm pulling up my other screen that I'm going to share with you. Give me 1 second here. It timed out on me while I was looking it up. But here we go here. Let me share this with you, ladies and gentlemen. Here we go. Oh, okay. I get what you're saying, Ms. Collin. No, database administration, their data is very secure. Yes. And we just looked at their financial report and we saw how they generate their money. So when I look at a company, I like to see, okay, how do you make your money? I make my money from cutting hair. I'm a barber. I like simple companies. I make money from cutting hair. Okay, if I know you make money from cutting hair, and then you tell me, hey, I'm doing something where I'm going to get more clients to cut their hair, I'm going to correlate the two and say he makes his money from cutting hair, and if he's generating more clients to cut hair, his revenue is going to grow. I'm expecting your revenue to grow, and if your revenue grows, that means that the value of you're going to grow up in time. And ladies and gentlemen, cloud computing is becoming. Look at Snowflake. Snowflake just IPO'd. I think that was last week. The first IPO that Berkshire Hathaway, aka Warren Buffett, got behind. And look at what they're doing. Cloud computing, thin client. People are not storing anything on their computers anymore. Nobody's storing anything on their computers anymore. Everybody is putting their thing on the cloud. Think about it. Facebook, I use Facebook as almost like my photo album. You know, I look for a photo. I don't know what that photo is. I can go on my Facebook. Oh, there it is. Boom, right? So people are not using thick client. People are not storing things on their computer anymore. Companies and banks, companies and everybody, people that's working from home are putting this information on the cloud, almost like Google Drive. I mean, you know, Google Drive, same thing. You upload your stuff to the cloud, and that eliminates having space all on your computer, having stuff all over your desktop. You can just put everything on the side, right? What's going on, Tony? Tony out there in Ohio, Cleveland, Ohio. So, ladies and gentlemen, here we go here. Let's take a look here. Let's log on here, and let's talk about finding that next gem. What can you do to find the next gem? So, ladies and gentlemen, I'm here on Stock Streamer. This is the Stock Streamer I had. You can go to markets. You go to research on E-Trade. Go to research on E-Trade. Same thing with TD Ameritrade. And go to Stock Streamer. Now, when you go to that Stock Streamer, right here, I just said we're looking for a small cap company, right? Right now, when I clicked on small cap, I'm looking at small cap and micro cap. Small cap and micro cap. These are the smaller capitalization of companies. Market cap is outstanding shares times the share price. That's how you get your market cap. Companies over 10 billion is considered large. I think companies over 500, I think it's 500 to 10 million. 10 billion is considered mid cap. Small cap is anything up under 500 million. Don't quote me on those numbers. I know 10 billion and more is large. I may be a little bit off there or whatnot. So right here, I want to say I'm looking for companies that are in that small cap range, small cap, micro cap range. It tells me right here I have 5,383. Now, if I wanted to see if it's in a major index, let's say if I only want companies that are in the S&P 600. S&P 600 is a small cap index. That's another way you can do it. You can go in there and find out whatever way you want to find out. Let's say if you're looking for technology, or you can leave it. Let's say we're looking for technology, and inside of technology, we're looking for semiconductors. So we're looking for technology companies, semiconductors that are small cap. I have 21 in my results. Now I want to stroll down here. I want to look at their profitability. When I spoke about it, I want to see, are these companies profitable? So we can do here, let's see, 0 to let's see what we got here. Let's go to above industry average. See if we got anybody above the industry average. So when I put in above industry average for the PE ratio, I'm going to profitability. I'm down to 5 companies. So I only have 5 companies that are in the small cap to micro cap space, meaning why I spoke about that is small cap company means you have a lot of room to grow. You can become a mid cap, a large cap. One day you can become a mega cap. I want to see growth into the future. So now I want to know, are you profitable? That's why I went to the PE ratio. So now let's take a look and see what the 5 results that we have. Now here we have 4 companies I never heard of. We have Benchmark Electronics, CEVA, and to me, another thing I like, ladies and gentlemen, I like companies. I like American-based companies. Now, I don't have anything against anybody else, but I would prefer American-based companies. So I'm looking at the P ratio, the book ratio, the debt to capital, 15, 0. Okay. All right. So now let's take a look at this first company here called Benchmark Electronics. Okay. Benchmark Electronics. So one thing I want to take a look at is how has it performed? I'm going to go to charts. I'm going to go back to year to date. How has it performed this year? It's had a year that has not been so great. It started out at how much? It started out at 34 bucks and now it's down to 19 bucks. So looking at that, it has underperformed the S&P 500. I'm not interested, right? So let's go to our next one. Let's go to G. I'm pretty sure if I could, I should be able to chart it down some more. Let's look at this chart on this company here. Let's look at the year to date. Okay, it has a positive year to date. All right. I'm going to see insider trading here. So it started out the year at 26 bucks and it has grown all the way to 37 bucks. When I put the S&P 500, this company has outperformed the S&P 500. Okay, has it outperformed the Dow Jones? It has outperformed the Dow Jones. Has it outperformed the NASDAQ? Wow, it has outperformed the NASDAQ. So now it has outperformed the S&P 500. It has outperformed the Dow Jones. Now I'm interested in this company, taking it a little further to see what else do we have with this company, right? I never heard of this company, ladies and gentlemen. You guys and girls are getting raw information of finding a company from zero. You're getting this information from nowhere else, guaranteed, right? So here we go. Now that we have this company, I want to go down here and look at the overview of this company and see what is this about. Right here, I can see it is headquartered in Mountain View, California. I can even go to his website. So CEVA, it is a licensor of signal processor of intellectual property. The company parent company was semiconductors and original equipment manufacturers to create connected services or ranges of end market, including mobile, consumer, automotive, Intel things, and whatnot. So I never heard of this company. They say they do something with IP. I still don't get a clear understanding. So it's a signal processing sensor and fuser connecting the world. Let's look at some of his partners. Okay, so they've licensed their information out. Okay, we're more than 40 licenses. Okay. Now, DSP Group. Okay, that's music. Yeah, that's the music company. I didn't know that. Fuji Films. I heard of that company. Intel. These are their licensing partners. LG, Microchip, Next Chip. So, ladies and gentlemen, let me share this with you guys. I'm on their website right now. So I've gone to the company's website and I looked up the company's website. Let me share it with you guys and girls so you guys and girls can see. I'm sharing the website for the people that are catching this great episode live right here. Licenses. So these are some of their licensing partners. So right here, I can see this company, some of the companies, DSP Group, I think I've heard of them. The Fuji Films, I definitely heard of them. Intel, huge company, huge semiconductor company. Definitely heard of them. Robots, LG, that's our phones. Definitely heard of them. Next Chip, I heard of Next Chip. Nokia, we've heard of Nokia. So this company, these are their partners. So now let's look at this company and let's try to learn a little bit more about them. Let's see if they have an about us. That's a pretty popular thing to have. Let's go home here. Let's see. Okay. All right. Okay. So it's headquartered in Mountain View, California. It is the leading licensor of wireless connectivity and smart sensitive technologies. I'm thinking of 5G. Where does it apt into the 5G world? So right here is telling me their technologies. They have signals, wireless platforms, softwares, all of the good stuff. Let's look at their 2019. Let's look at their earnings report. All right. Total revenue for the second quarter has rose $23 million, an increase $18 million revenue compared to the report. Okay, so they have growing revenue. So when I look at this company immediately, I know it's a profitable company. I'm looking at its fundamentals. We're looking at their fundamentals here. They don't have all the information. This is their press release here that they did for the second quarter, which is okay. Look at their total revenue compared to $8.1 billion a year ago. When investors 10 million royalty revenue. Okay. Licenses agreement. Let's look at some of the numbers. I don't want to read the press release. Press release sounds good, but the total revenue is up 28% year over year. So look at this, ladies and gentlemen. This is a company I never heard of. A company I never heard of that I went through, and I found this company that's outperforming the NASDAQ this year, which is the strongest one out there. It's a semiconductor company. Now I can take my interest level and say, okay, well, let's take a look at the insider activity. I want to get to their SEC filings. Let's go to investors. Let's go to SEC filings. All right. Quarterly report here. I'm going to go to PDF. I'm going to click on it again. I think it's downloading it. Why is it not giving me that PDF? All right. Hang on 1 second here. It's my guy Clarence. All right. So now I'm looking at this company. I went from the rooter to the tutor. I'm from the South. People say the rooter to the tutor is when you start all the way from the top and you zoom your way all the way down and you're trying to find the next thing. And you guys and girls see how I went in and looked for the next thing. I found a profitable company, small company for $37. Let's see if it pays a dividend. Ladies and gentlemen, let me tell you another thing. I don't care about dividends. This is the thing that nobody tells you about dividends. I used to be very big into dividends. I thought collecting dividends was a very great thing, but I want to let you guys and girls know something about dividends. You know, why I don't care for dividends. Now, some people look at me, Prince, you're crazy. Why do you care about, what do you mean you collecting money from the company? And the first thing I learned from this, ladies and gentlemen, I'm going to get back to that gym. The first thing I learned, ladies and gentlemen, dividends, when I used to see that, I get that message from Apple, Microsoft, dividends are great. I think I wrote in here the wrong thing. Why I don't. I care for them, but I don't care for them. I used to look at dividends. And I used to be like, hey, if this company don't pay me dividends, I don't care for it. Then I looked at Berkshire Hathaway. I used to always look at Berkshire Hathaway. Why they don't pay dividends? Why they don't pay dividends? Why I don't care for dividends? Why Berkshire Hathaway don't pay dividends? I would go to the annual meeting and I would sit and listen to why they didn't pay dividends. And they would say, hey, instead of giving you dividends that you're going to have to pay tax on, if I give you a dividend, you're going to have to pay tax on that dividend. And if you have to pay tax on that dividend, the tax man is slowly collecting money over time, ladies and gentlemen. The tax man, because whether you reinvest that dividend, you're still going to owe taxes at the end of the year. If you collect that dividend, you're going to owe taxes on those dividends every single year. So instead of Apple giving me a dividend, making me feel good, what if Apple kept that money and grew the company? So instead of getting paid in dividends, the stock price rose. So investing into high growth stocks that don't pay dividends is actually a way to defer taxes, right? It's actually a way to defer taxes. It can be seen as a way to defer taxes. Collecting dividends, granted, if you have a portfolio where your investment objective is to collect money, collect the income, maybe you're later on in life where you want to fix the income, different conversation. But for someone who's trying to grow their capital, who's trying to grow 5, 10, 15, 20 years down the line, investing into a high growth stock. Think about all those people who brought Tesla for $100. And now Tesla is going up to $2,000. Now it's split. Now they're at $400 or whatnot. Do you think they are crying about a dividend, or do you think they like that growth? They like the growth. Ladies and gentlemen, look at the people who purchased Apple. Look at the people who purchased Tesla in the beginning of the year. They're not complaining that they didn't collect a dividend, even though Apple does pay one. They wouldn't be complaining that, hey, man, I never got a dividend. When they see that growth, they can care less. So I used to be very caught up on dividends, not realizing that for a long-term investor, it can also be against your portfolio goals if you invest into dividend paying stocks, because you constantly have to pay income tax at the end of the year when you have dividend stocks. That's why I don't really care for dividends like I used to. I used to be like, man, if this company don't pay a dividend next, I want a dividend. I want a dividend. Wow, I woke up and I used to like to get that message in the morning. Oh, you collected a dividend, make me feel good. But then I started to realize over time, at the end of the year, even though I didn't collect that dividend was reinvested into drip. Even though that dividend was reinvested and I didn't collect it, I still had to pay taxes on the dividends. That's why I didn't like that, ladies and gentlemen. That's why I want to tell you, don't be so caught up in a dividend. If I purchase CEVA for $30 and next 2-3 years from now, it goes up to $1,000. It goes up to, I don't know, $100. I don't care about collecting a dividend. I like that growth. So that's why I don't care too much about dividends. All right. Now let's get back to that gym. Let's see what y'all saying in the comment box about that gym here. Beyond Meat, BYND. I think he's saying that's a gym. I don't know much about Beyond Meat, but I only think Beyond Meat is profitable. So if you're not profitable, don't mean you're a bad company. I have a company called CrowdStrike, which I'm very big into. Uber. They're very unprofitable, but they're positioned in a certain way to, I think they're going to even hit strides. You know, companies like CrowdStrike are right in the crust of what's next to be the biggest thing to dominate the world. Cloud computing is the next internet. Well, it's not the next, it's there. More people going to cloud computing. People are not going to have those big warehouses with servers. They're going to go to people like Snowflake and Oracle to maintain their data, right? So that's how I look at it. She said, wow, Jacqueline said, wow, good explanation about dividends. Yes, Miss Jacqueline, I used to be very, very big, but as I grew into it, I realized that dividends wasn't as great as they said they were. Would you rather pay your taxes now, or would you rather defer your taxes to a later date? I would rather look at Facebook. Facebook doesn't pay dividends. Google doesn't pay dividends. Tesla doesn't pay dividends. High growth technology stocks can be seen as a way to defer taxes to the future, even though you don't collect a dividend in the meanwhile. Collecting a dividend right now, you got those big, heavy dividend companies like a Coca-Cola. That's good for someone who's trying to generate an income. But for someone like, take my son who's trying to grow his portfolio in the next 10 years, having him pay taxes every year on dividends that are being reinvested that he hadn't even seen the money, he haven't realized yet. It's very goes against your portfolio. Cloud computing, the Internet of Things. You're right. Cloud computing is the next internet. Everybody's going to cloud computing. Ladies and gentlemen, I plan to work out of this office until I can't work here no more. And all my data, all my storage is going to be on a cloud, guaranteed. I'm looking for someone else to hold the data. I just want to work here. I'm not looking to go get some big fancy office downtown, high rise. I think those days are gone. So you gave me a better understanding. No problem, Ms. Jacqueline. Thank you. Glad I can help. That's what we aim to do here on the Investor Show. The only place you can tune in and get real information, real things, and you also get in people teaching you how to fish. Most people want to give you information, but they don't want to give you, if you have a financial person that's not teaching you, that's not a good thing. If they're not teaching you what they're doing, how they're doing it, then that's not good. So the financial industry, I love to teach people as I go along, because so many times my private clients will come to me and say, Prince, I'm looking at this. Tell me what you think about it. And that's what I look to do. All right. So sometimes don't get caught up in those dividends, ladies and gentlemen. That's very, it feels good when you're collecting that dividend, but that's a way. If I had a publicly traded fund and I paid dividends, that means all my investors are going to have to pay taxes on that. I'd rather keep that money and continue to grow the fund and let the value continue to grow, to defer the taxes as long as you can. All right. Let's get back to that gem that we found, ladies and gentlemen. We found this gem here called CEVA. I know nothing about this company, but looking at this company, I'm trying to look up I'm going to find it. It's trying to hide from me here, but I'm going to find the SEC report. We're going to look at it today together. This is the 10Q report, ladies and gentlemen. I don't know where it went. It says downloading, but it's not downloading, but that's okay. It's this place called the SEC. It's a good place where I can go get the SEC files, but we're going to look it up. So we're going to go to sec.gov. This company was CEVA, right? There it is. So we're going to go here. So ladies and gentlemen, you see how I did that. Now I'm going to the sec.gov. The website didn't want to play nice to me. So I'm going to show you, ladies and gentlemen. Let me put my title back up here. Ladies and gentlemen who just caught this or just catching on, we found this company just by looking at it on just by looking it up, drilling down. So here, this is the SEC filings for CEVA. I want to go right here to their interactive data. Right now, this is pulled up. I want to go to the 10Q. This is the 10Q for the company. Now, ladies and gentlemen, I can show you another way to read it quickly, but I'm not going to show you, ladies and gentlemen, how to work it quickly. Right? Current assets. The total current assets, is this in millions? Okay, this is in thousands. Okay. Very important when you're reading financial statements. Some of them are in thousands, some of them in millions. So since this is in millions, this means that this company total current assets, the total assets they have is 296 million. And total assets as of June 30th, 2020, this is unaudited by the SEC, right? And their total liabilities, where are their total liabilities? Total current long-term liabilities, 18 million. Okay. So right here, ladies and gentlemen, the total stockholders' equity is $252 million, right? So look at that total assets and the total liabilities. That's pretty good. Look at their revenue. So in 2020, they made their revenue $28 million came from licensing and relative revenues, and $19 million came from royalties. So they make their money from licensing and royalties. So this company has some type of technology that they're licensing out and that they're collecting a royalty from. So the total royalties is 47 million in the last 6 months, and it's up from 35 million this time last year. So the cost of revenue, 57, gross profits, 41 million. So the operating expenses, I don't like research and development, ladies and gentlemen. When I look at growing research and development, it's like this. I like companies. Let's take a company like Coca-Cola. Company like Coca-Cola, how often does it have to change its factory? Coca-Cola doesn't have to change its factory at all. But you look at a company like Ford. Ford, every time they get a new truck, they get a new model, they have to change it every 2, 3, 4, 5 years to make room for the new model. They got to get new robots, stuff like that. So in the technology world, I like to see companies that can do the same thing over and over and over and just make crazy money, right? So when you look at research and development, a lot of companies have to keep being on top of technology, and one day the technology could become obsolete, which I don't like. But I don't mind if it's growing, but also the money is growing. All right. Now, this is the part I don't like about the company. After the total operating losses or whatnot, they're having a net loss. So they lost $2 million here. They lost $3 million. Okay. So they're losing less money. So it's a small cap company. So they lost $2 million this quarter. Last time this year, they lost $3.8 million. This quarter, they only lost $2.2 million. Okay, it's losing less money. I don't like to see companies that lose money. Now I know they make their money from licenses and royalties. When I know they make their money from licenses and royalties, I can now understand further of when I think their money is going to grow. Okay, so this is their cash flow statement. Let's look at their balance sheet. I want to see their balance sheet here. Okay, this is their cash flow statement. Let's look at the balance sheet here. Where are their balance sheet at? What information can I get off of the balance sheet, ladies and gentlemen, for my people that is tuning in as I find this? Oh, I already did look at the balance sheet, didn't I? No, I didn't. No, I did. Total current assets. So they got 29 million in cash. They reported 29 million in cash, 58 million. So their total current assets of 182 billion. When you have 182 million, I'm sorry, ladies and gentlemen, 182 million dollars is what they reported on June 30th, what they had in cash. A total current asset. Total current assets are things that can be turned into cash within less than 12 months. So 182 million in cash. Let's see how much they have in debt. Okay. Revenue, accrued debt, accrued payroll, benefits, operating leases, total long term, 18 million. I like that. The debt to income ratio is very, very small. With their cash, they can pay off their debt tomorrow morning if they wanted to. So this company practically has little to no debt, even though it's netting a loss by looking at the company. Pretty solid from, pretty okay finances of looking at it straight on. Debt is pretty controllable. The debt is pretty controllable. So I like that. Okay. Let me see what y'all saying in this comment section. Dan, I think you said his name. The dividend growth strategy is viable with the right investment, especially for a child who's 50 plus years to grow their income. Explain it. Explain that. You're saying, there is a great strategy, but it's not for everybody. It depends. It depends on what your investment strategy. Let's say if you're a child, would you like your child to defer his taxes, or would you like to pay his taxes right now? If I'm trying to grow my investments, do I want to pay taxes now? People have different outlooks on that. When you look at a traditional Roth IRA and a traditional IRA versus a Roth IRA, that's the two biggest things. Do you want to pay your taxes now? Do you want to pay your taxes later? People who are benefiting traditional IRA, they say, hey, I want to defer my taxes as long as possible to let my investments grow tax-free, then pay it off of. Right? Go ahead. Doug is a fool. He said I had to speak to my financial advisor about CEVA. Freddie B, you said you're looking at Cake, TRB, DBX. I'm gonna write those down, and maybe the next episode we might be able to catch those. Freddie B, I won't be able to get into that, right? But it's different strategy for different folks. I can't sit here and say dividends are bad, or I can't sit here and say dividends are great. It has to be cookie cutter. I can't give a cookie cutter explanation. It has to be tailored to what the person is doing. So I'm going to see what you got here. TRB. So you already know, Freddie B, these companies better be profitable. You already know what my stipulations are. Are these companies profitable? Are they performing at the top of their industry? All right. Yeah, ladies and gentlemen, this is my office. I'm shooting live today for the first time ever from my office. I didn't feel like going to my studio, which is right across the hall. I thought it'd be a different look. So some of y'all might be looking, Prince, where you at? So yes. So thank you, ladies and gentlemen. That's going to conclude today's episode. Let me do a recap for you, ladies and gentlemen who didn't catch it. We talked about the cycle of the stock market. We talked about why our stocks fall, and we went through this, ladies and gentlemen. We talked about it. Sometimes investing is about, it's like I equated it and I used a metaphor of teaching my son to ride his bike. When you're riding your bike, you will fall down. Falling down is part of learning to grow. Learn to ride your bike. Investing for the long term, volatility is part of investing for the long haul. So when you invest for the long haul, one of the pros of investing into stocks is that they will outperform every asset class. Historically, they have. The downside is the volatility. The thing that make it great is the thing that make it bad. The liquidity. You can sell your stocks tomorrow morning if you wanted to, But since people have the ability to buy and sell their stocks whenever they want to, this is what create massive swings into the market. Real estate, you don't see massive swings into real estate too funny because it takes a while to do a transaction. If I wanted to sell my house today, it could take me up to 30 days, to 30 to 90 days if I wanted to sell it today. If I wanted to sell everything in my portfolio, I can do it within 30 seconds tomorrow morning. So by having that mass volatility, this is what causes stocks to drop. You don't have to wonder if something wrong. My son Wesley, Dad, what did I do wrong? Why did I keep falling off my bike? I had to explain to him, son, this is part of learning to ride your bike. He thought when he fell, he thought he was doing something wrong. So just because you see stocks drop, it's part of the cycle of the long-term investor. The downside of stocks, ladies and gentlemen, is going to be high volatility. Here's another gem. When you see massive swings in the stock market, stocks are selling, stocks are buying, stocks are selling. When you see those massive swings, this is when companies like E-Trade, TD Ameritrade, and Goldman Sachs are the winners. The broker house win when we sell stocks. The next thing we went into, ladies and gentlemen, we went into the Walmart Oracle Tick-Tock deal. We read exactly from the Walmart website. We went straight to what Walmart had put out. We didn't read somebody else's article. We got it straight from the horse's mouth, and their documents and what they say is held by the SEC. They can go to jail pretty much. The Act of 1934, Security Exchange Commission of 1934 Act. They can go to jail by putting out misleading or false information. So Walmart said they're looking to acquire 7.5% of Tick-Tock to promote and market themselves. Oracle is looking like they're going to get 12.5%, and they're going to take over the cloud services for Tick-Tock, and they're looking at taking Tick-Tock public within the next 12 months. Very profitable. I think in my terms, that's going to be a more profitable deal for Oracle. Finding the next gem. Ladies and gentlemen, we drilled down. I did a step-by-step finding the next gem. We went straight through it, and we discovered a company called CAV. Never heard of this company before, but I went through exactly what you guys and girls. We looked at a small cap company. What did I look for? I was looking at a company that was in the small cap, large cap. A company that's in the small cap, large cap is very risky, but it has the potential to become a middle, large, mega. The next thing we didn't look at their competition. We did not look at their competition. I have to do that. We looked at, were they doing some life-changing technology? When I looked at this company, it looked like it might be tied into Verizon 5G. It looked like it might be tied into 5G, a big thing. It was profitable. It beat the S&P 500 and the NASDAQ so far this year in a crappy year. The beta of the company, we also looked at the beta of the company, why the beta is so important to the company. We want to look at a company with a beta of 1 and above. That means that it's a little bit more volatile than the market. But I like a company with a little volatility, with a little spice. I want to see you move, right? Not crazy move, but a little bit of move to the upside. We looked at, was it building revenue? It was. Its revenue was increasing, but a downside it was netting losses. Cash, had a lot of cash on hand. Its debt was 60% lower than its total assets. That came from Benjamin Graham. I stole that bullet from him because, he wrote the book. He wrote so many books, but I'm reading his book called Security Analysis, and it's like this big. And he was the mentor to the richest investor of all time, Warren Buffett. And I think they know a little bit more than I do. So I took in one of their things. And that's what we looked at, ladies and gentlemen. It was a great episode. We went through, we broke down the deal. We talked about the market of the stocks things. We talked about dividends, why I don't really care for them. Great episode. Let me see what y'all said in these comments before I get out of here. Mike said, great show. Thanks, Mike. Thanks, Mike. The Dan, let's see what you got to say. I think that's how you say it. He says, picking stocks that grow their dividends. Okay, I get what you're saying. 10 plus a year. I think paying 15% long-term capital gains on profit while increasing my yield on cost is a fair trade. Okay. A company, those are dividend aristocrats. Dividend aristocrats are companies that have not only paid dividends for 25 years, but also have risen in dividend for 25 years. That's a dividend aristocrat. The dividend king is a company that's done the same thing, but done it for 50 years. If you raise your dividends for 25 years, that means you have risen your dividends consistently, even in a recession and a down economy. That can show the health of your company. So people, do you utilize dividend growth as a way to tell the health of a company? If a company can afford to keep paying dividends and raising their dividends, that could be a great sign of a great company. I do agree with that, Duran. He said dividend for Mr. MG Cannabis ETF. Okay. I got to get my cannabis episode back. He said, Duran, he said, I love your content, brother. Appreciate it, man. I thank you. Thank you, guys and girls, for everybody that tuned in. Don't forget to go out there. I know somebody wrote in here about Cash App. I don't do Cash App. I tell people don't donate to me. Support me. If you want to support me, if you love the content, grab you an Investor Show mug right there in the description box. Also, make sure you grab that Wesley Learns book series or children's books. It doesn't make sense for you to learn everything, pass it to your kids, and they don't know anything. So make sure you get the world's first children's book series on financial literacy. Wesley Learns to Invest, Wesley Learns about credit, and Wesley Learns about insurance to pass that knowledge down to your kids and to make great gifts across the world. If you already purchased it and you already supported it, I thank you. Give it to someone else, support someone else or whatnot. So, ladies and gentlemen, boys and girls, and children of all ages, my name is Prince Dykes. I'm the Prince of Investing. Until the next video, podcast, cartoon, or whatever else crazy you see me doing around the globe, peace, be safe. I'm out, and thank you.